So today we're going to look through a mock exam that I have created from scratch. So you're not going to find this anywhere else on the web. This is fresh material and hopefully it's going to help you to pass your Introduction to Bookkeeping exam at AAT Level 2. So let's just jump into it. So this is a typical style mock exam. It's going to take an hour and a half to go through. Maybe not that long with me going through it with you, but it should take about an hour and a half normally. That's how long you've got for the exam. So there's 100 marks available. We only need to get 70% to pass. So let's scroll down to the first question. So this is multiple choice and we need to select the right answer. So what is a trade discount? Is it something that's offered for early payment, a reduction in price offered to encourage large orders, applied after VAT, or a penalty for late payment? So it's definitely not D. The question, it depends. It depends on the invoice whether or not it's applied before VAT or after VAT, so that's not the right answer. And it's not offered for early payment. So it's actually B, a reduction in price offered to encourage large orders. Next question. Which of the following statements about prompt payment discounts is correct? They reduce the unit price shown on the invoice. That's not the case. They are offered to encourage early payment, possibly. They increase the total payable on the invoice. Definitely not, because they're reducing the total amount that's payable. And they are the same as trade discounts. No, they're not the same as trade discounts, because with a prompt payment discount on an invoice, what it's saying is you can get a discount of, let's just say 5% if you pay that invoice early. That's not what a trade discount does. A trade discount in the question, the first question, basically means that you would get that discount whether you pay it within 30 days, 7 days, 10 days, or within the payment terms essentially on the invoice, but it's not the same thing as a prompt payment discount. So the answer here is that they are offered to encourage early payment. So let's scroll to the next question. A supplier offers a 10% trade discount. They list an item at £200. What is the price after trade discount but before VAT? So again, this is why it's really super important that you read the question at least once or twice, because sometimes they'll say work out the trade discount before VAT, sometimes after VAT. So just be careful of that in the exam. So if we've got a list priced of £200, and all that means is if you look at a normal invoice, you see quantity 1, unit price £200. That's all that is. So don't be confused by the terminology. So if we've got a trade discount of 10%, if we take that £200 and times it by 0.1 on our calculator or in Excel, we get a discount of £20. So what that means is that the answer is going to be 200 minus 20, which is 180. Simple as that. Do not overcomplicate this. And again, if you're dealing with any kind of percentage in your calculator or in Excel, all you need to do is remember that on a calculator, 1 is the equivalent of 100%. So if we want a percentage, so 10%, 20%, 30%, we're going to times by point, whatever that is. So 0.2 for 20%, 0.1 for 10%. Again, don't overcomplicate it. So let's move down to task number 4. Okay, so we've got a supplier invoice and we've got goods total before discount. Again, really important that you take note of that. Trade discount's 15%, VAT is 20%. And we're being asked to calculate the discount amount, the net amount after trade discount, VAT amount, and final total payable. So let's just put this together. So if our goods total is £1,000 and our trade discount is 15%, which we're going to calculate just now, so times by 0.15, our discount amount is £150. Now this means that the net amount after the trade discount is going to be £1,000 minus 150, so that's 850. Next we need to work out the VAT amount. Now just be careful again in these questions, because the VAT percentage is not always going to be 20%. It just so happens that it is in this question. So if we take 850 times that by 0.2, that gives us 170. Then we need to work out what the final total payable is. So all we need to do is take the net amount of 850 plus the VAT amount of 170, and that is our answer. So let's move on to number 5. So I'm just going to jump in really quickly before we move on to the next question and let you know that there's now 4 mock exams that are available on the website that you can see here. So I'll leave a link to those in the comment section for you, but let's move on. Okay, so a business offers a 5% prompt payment discount if the customer pays within 10 days. How should this be shown on the invoice, and what should the customer do to benefit from it? So what it should say on the invoice is something like 5% discount applied if paid within 10 days. And what the customer should do to benefit from it is ensure the rest payment within 10 days. Okay, question 6. Define the difference between a trade discount and a prompt payment discount. So we've already kind of touched on this. So what are the main differences? So a trade discount is a discount given to the listed price on the invoice, and that's whether that's a sales invoice or a purchase invoice. We don't need to define that in this answer. And this is often given to like loyal, regular customers, for example. Okay, so prompt payment discount, therefore. Prompt payment discount is a discount given on an invoice if payment is made within a set time frame as defined on the invoice. Now, the difference is that this is shown as a conditional offer dependent on the company making payment within the time frame. So unlike a trade discount, which is given regardless of when the payment is made. So I hope that's clear. Again, as I go through any of this mock, you can ask me questions in the comments section below. So make sure to pause this if you're not sure and you're still confused between the two. Question 7 for 4 marks. So which of the following VAT rates applies to children's clothing in the UK? Is it standard rate, reduced rate, zero rate, or exempt? So, want to hazard a guess before I give you the answer? The answer is 0 rated. Thank goodness for that, because they already cost a lot as is. So yeah, they're 0 rated. And if you're ever unsure as to what VAT rate applies to certain goods in the UK, there is a HMRC listing that you can go to. And also, when you're practicing in real life, when you've got, whether you're working in a practice or you run your own practice, there are books that you can buy on tax that come out every single year, such as those from Krona or from Tolly's, for example, which give you all of the relevant VAT rates for particular items or goods. But again, you could always just check those on the HMRC website too. So don't be discouraged if you didn't know the answer to that straight away. So let's move on. Okay, question 8. A supplier offers a 10% trade discount at an item priced at 300 and the VAT rate is 20%. What is the VAT amount after discount? So, similar question to above. If the item is £300 and we're applying a 10% discount, we're going to do times by 0.1. That's the discount, £30. So we do 300 minus the discount of £30. That gives us £270. Then we need to take the 270 times that by 0.2 because it's 20% VAT. And that gives us 54, and that is the right answer there. Question 9. Which of the following would normally be 0 rated for VAT? So again, like I said earlier, you can always check this on HMRC's website, check in your workbooks or other external resources. So do we think it's restaurant meals, electricity, books or alcohol? Electricity is usually 20%. Alcohol, again, there's VAT. Restaurant meals, there's VAT. And you'll see that if you ever get a receipt when you go to a restaurant and it states at the bottom, any tips and VAT, etc. That's in the UK. So I'll caveat that because if you go abroad, obviously there's different VAT rates, etc. So the answer is books. Books are 0 rated for VAT purposes. Okay, task number 10. A purchase invoice includes 3 items: £100 of goods at 20%, £80 of goods at 5%, and then £60 of 0 rated goods. The supplier offers a 5% trade discount on the entire invoice. Okay, so we need to calculate the net amount after discount. So we're going to get a discount for each one of these line items. Total VAT amount, total amount payable. Now we've actually got a box here to calculate this, so let's go up a sec. So we've got 22%, 5%, 0. So I'll pop these in here. The original net price, so we've got 100, 80, 60. The discount is 5%, so if we do that times by 0.05, and again this is 0.05 because if we put 0.5 that's 50%, so 0.05. So the net amount after the discount is 100 minus 5, that one is 80 minus 4, and that one is 60 minus 3. So our total net after discount is £228 VAT rate. So 20%, 5%, 0%, although we've got it there as well, so don't know why we've got to enter it twice, but we do. So we want the net times by the VAT rate, so 95 times by 20%. And again, if you're doing this in your calculator, you want 95 times by 0.2. For this one, you want 76 times by 0.05 for this next one, and then 57 times nothing, because it's 0 rated, so there's no VAT on that one. So our total VAT is £22.80, and what we now need to do is pop that in here. So the total net amount after discount is 228, total VAT £22.80, and the total amount payable, otherwise known as the gross value, is going to be 228 plus £22.80. And it just so happens to be just a coincidence that that's essentially looking like it's 10% total of the net. There's no correlation between that whatsoever. It just so happens that it is in this question. So let's move on. Okay, so task number 11. This is worth 10 marks. A customer receives the following sales invoice from Bagel Bakery Limited. And we've got quantity, unit price, VAT rate, total before VAT. Okay, we've got items, baguettes, bottled soft drinks, and the bakery offers a 10% prompt payment discount if payment is made within 7 days. Okay, so what we need to do is calculate the total before VAT, and then calculate the VAT after discount is taken, and then total amount. So what do we have? So the total before VAT is that plus that, so 95. So the reason why it's 50 plus 45 is because if we did quantity of 50 times by 1, that gives us 50. If we did 30 times by 1.5, it gives us 45. So you might be tempted to put that in as the total before VAT, but we need to apply the discount here. So the discount is going to be that times by 0.1, so £9.50. So what we're actually going to pay net is £85.50. So again, this is why it's so important to make sure that you don't make silly mistakes on this exam, because it's so easy to do. Calculate the VAT after the discount is taken. Right, okay, so 2 elements to this. We can't just take £85.50 times by 0.2 because these have got different VAT rates. So if we actually put up here what the discount is, and then the net after the discount, just to show you where that's come from. So 45 and 40.5 there, £40.5 even. So that's the net after discount. But we need to work out the VAT. So there's no VAT on this at all, but that one is times by 0.2. So that's £8.10. So our total VAT is £8.10. So this means that the gross amount payable is that plus that, as in 45 plus nothing, £40.50 plus £8.10, and then we'll add those together, so that's £93.60. You could just do £85.50 plus £8.10 based off the workings, but just to show you where that has all come from. So again, be really, really careful when you're answering these, because it looks really straightforward at first, and then suddenly you think, oh, hang on a minute, they've got more than one VAT rate. So just be careful. Okie pokey. So let's make that green. A customer named Office Mart Limited has a credit limit of 5k with your business. Okay, so what that means is we allow them to purchase £5,000 worth of goods before they then have to make a payment. Their current outstanding balance is £4,200. They place a new order worth £1,200. You are preparing the sales invoices. Okay, so what is the credit limit and why it's important? So I've just told you the answer to that, so let's pop that in. So a credit limit is the maximum, can't spell, that a customer is allowed to spend on their account before having to make a payment, i.e. it's the maximum they are allowed to owe at any given time. And why is it important in the sales process? It's important to manage credit risks to ensure that customers are able to pay within their own cash flow limits. And it's going to add a new line here, and it ensures that the company offering the credit keeps a healthy cash flow. So imagine if you just let customers rack up tons of debt and not pay on time. You'd be in a very difficult position from a cash flow perspective. And on top of that, in the real world, sometimes customers can't pay. And I've seen it time and time again where these big debtor balances start building up because they've got all of this trade on credit that they've not yet paid for, and companies spend so much money every year chasing debt. So it's really important that those credit limits are reviewed regularly to make sure that, again, they fit with the company's cash flow and timings. And for those tricky customers who are bad payers, for example, that you reduce that credit limit. So, based on the information above, what action should your business consider before issuing the invoice? So, here essentially we need to make sure that they're going to pay. They're going to end up going over the £5,000 limit because they've already got £4,200 on credit. So we need payment from them before we approve this transaction, so this sales invoice. So one answer here is we could request payment from Office Mart to cover the £4,200 on their account, or to sufficiently reduce this below the £5,000 limit when we also include a sales invoice of £1,200 excluding VAT. So again, that's excluding VAT, so that's not the total of the invoice. The other thing that we can do, we can also review the credit terms for this customer and make a decision on whether or not to increase their credit limit. It's another thing that we can do, which we might choose to do before asking them for payment. So if they're, again, a good loyal customer, sorry, I've got to move a bit, and they always pay on time, you might want to consider that. Cannot spell, here we go. So there is that answer. What could happen if you ignore the credit limit and allow the sale to proceed? So again, we've touched on this. Well, the total amount payable by this customer could theoretically become a bad debt. We may not receive the money for the goods on credit, which will impact our cash flow negatively. And this will also breach our own internal controls. So why would we allow one customer to breach their credit limit we'd want to make sure that we're monitoring that. And for those that work in sales or those that work in credit control of any kind, you will know that it's really important to monitor those credit limits and make sure that customers don't go over that. And a lot of systems that people use nowadays, like your Xero, your QuickBooks, your Sage, your Free Agent, etc., have those controls in place. So it'll come up with a red flag to say, are you sure you approved this invoice, they've breached their credit terms? So we do have systems that can check that now. It's not just a manual process, but that could very much happen. Next question. Before approving and recording an invoice, what checks should be carried out to ensure the invoice is accurate and valid? So 5 checks you would make. So what I would want to do is, firstly, I would be checking the quantity, because you don't want to be billed for something that you're not actually purchasing. So if you're a supplier making a purchase, you would want to make sure that the quantities on there match, for example, a purchase order, or match what it is that you have purchased. Equally, if you are the company who is selling to somebody else, you'd want to make sure that the quantities on that invoice are correct before you send it out, because you don't want clients kicking off. So we'd check the quantity. We would also check the unit price check, again to ensure accuracy of that unit price. We would check the net total, again for accuracy. Very important that we check the customer listed on the invoice, because again, we don't want to be sending out an invoice to the wrong customer. Again, that doesn't tend to happen a lot with software that we use nowadays, but it can still happen. And we would also want to check the VAT. So you could put other answers here, but essentially we want to ensure that the VAT rate shown on the invoice is not only correct, so if it says 20%, that it is supposed to be 20%, but also that the total on the invoice is calculated correctly, because again, it doesn't happen so much with systems that you've got in place nowadays, but invoices are still produced manually in some cases, and you can end up incorrectly calculating the VAT and end up upsetting the customer, which is not what you want to do. So with questions like this, just sort of take that more of a commercial mindset and think, what would you do in that situation? If you've got, no previous accounting or bookkeeping knowledge, what makes sense? So common sense here, what would you check for? And similarly, just think about it. If you were receiving an invoice yourself, what would you check? Would you just take it at face value and go, it'll be fine, the total amount I'm paying is correct? Or would you check that invoice and go, hang on a minute, no. So yeah, let's move on. So which of the following is an alphanumeric code? So again, this is really important. And I actually had a conversation this week about this with somebody else. So alphanumeric coding means that we've got an element of alphabetic and numeric coding. So if something is just numeric, you're just going to see numbers. If it's just alphabetic, you're just going to see letters from the alphabet. And if you've got a cross between the two, then we call that alphanumeric. So in this case, the answer is ABX19. And you might be wondering why it's not A, that's all numbers, why it's not C, that's all letters, and why it's not D is because $signs are not in the alphabet. So really simple. Again, do not overcomplicate these questions. Let's move on. Marks, which of the following accounts has a credit balance in double entry bookkeeping? Is it the bank, sales revenue, rent expense, or purchases? Well, the bank's going to be a debit balance in most circumstances because it is an asset, unless it's a bank overdraft, of which case that's going to be a credit. Sales revenue is a credit. Rent expenses is going to be a debit, and purchases is going to be a debit. So the answer is sales revenue. 4 marks. What is the basic accounting equation? So is that assets plus liabilities equals capital, assets equals liabilities plus capital, capital equals assets minus expenses, and income minus expenses equals profit. So 2 things. The bottom 2 we can just strike out just like that because they're mentioning income statement items. The basic accounting equation refers to essentially those items on the balance sheet. So it's either going to be A or it's going to be B. So let's think about this logically. Now, all of your assets in your accounts are going to be the total of all of your liabilities and all of your capital added together. So it's not going to be all of your assets plus liabilities equals capital. It's going to be assets equals liabilities plus capital. So that is your answer. And if you want to just double check that, open up any balance sheet that you've got in a set of accounts, and go on Companies House and have a look at other accounts that have a balance sheet shown, and just do some simple maths, and you'll see that assets equal liabilities plus capital. Sometimes that's the best way to learn, to be honest, and it was the way that I needed to learn back in the day. So question 17, fill in the blanks. Complete the following accounting equation. So we've literally just got the answer above, so it's kind of cheating in a way. So we've got assets equals liabilities plus capital. Maybe they shouldn't be close together like that. 18. State the double entry for the following transaction. So a business receives £800 cash in from a customer who previously owed money. Okay, so we're going to have a debit to the bank of £800, and we're going to have a credit to trade receivables. And the reason for that is because if they've bought anything on credit, then it's going to be sat in our trade debtors or our trade receivables account. So that is a debit item because it's an asset to us. So if they pay it off, we're going to reduce it. And the way to reduce the trade receivables is to credit. So let's move on. State the effect on the accounting equation of the following transaction. The business buys an asset, a van, for £5,000, paying by bank transfer. So here we don't necessarily want to know where this is going. What we need to know is what it's going to affect. So is it going to affect liabilities, capital, assets? So this is going to be a debit to motor vehicles, aka a debit to assets. And if it's paid by bank, it's going to be a credit to bank, which again is going to be a credit to assets. Question 20. Explain why the trial balance must agree in double entry bookkeeping. So why does it need to agree? The reason for that is because every transaction has an equal and opposite effect, i.e. each transaction has a debit and credit effect. Consequently, the trial balance must balance. So if you posted all of your debits and credits correctly, then that's going to balance. Simple. A business makes the following transactions in 1 week. The owner invests 10k into the business. The business buys inventory of 2,500, aka stock. The business sells goods for £1,000 on credit and pays £200 for advertising by bank transfer. Use the double entry system to identify the accounts that are affected and state if they're a debit or a credit. So we've got a little table here to fill in. What we need to state is what accounts are going to be affected here. So here, well, we're going to have a debit to the bank and a credit to capital because that's the owner putting money into the company, so that's going to make the bank go up, and the credit is going to be capital because owner capital is a credit on the balance sheet. Buys inventory for £2,000 cash, so stock is going to go up and the credit to the bank. Sell goods for £1,000 on credit, so our trade receivables is going to increase and our sales are going to be credited. So sales are a credit in the income statement. So if they go up, then it's going to be a credit. If we have a sales return, that's a debit. So pays £200 for advertising. So advertising costs are going to be a debit in the income statement and the bank is going to go down. So next question. So we've got some T accounts to complete. On the 1st of March, the owner introduces 5k into the business bank account. So again, here we've got the 1st of March. That's going to be capital, and that's a debit, £5,000 into the bank. And then we're going to credit the capital account on the 1st of March with £5,000. Simple. Okay, so on the 5th of March, the business pays £1,200 to a supplier by bank transfer for goods previously purchased on credit. So that's important. So if we're going to pay anything out on the 5th of March to trade payables, that's going to be £1,200 there. Okay, let's make that bigger. There we go. Now, trade payables is a credit on the account in the balance sheet because it's amounts that we owe out of the company to somebody else. So we've got the goods in, but we've not paid for them yet. So if we're making a payment, we're therefore going to debit the trade payables account for £1,200, just like that. Again, as I said before, if you've got questions on this, please do ask. And then we've got this question here. So question 24 for 8 marks. This is our final question. You're given the following transactions for Bright office supplies for the 12th of April when each transaction occurred. Okay, the VAT rate's 20%. So we've done a load of things here. We've sold goods, we've purchased office equipment. Okay. So record the above transactions using the T account shown. So what's going to happen to the sales account? Well, we sold goods for £600, excluding VAT, on credit to a customer. So sales is going to go up by £600. Okay, now to work out the VAT, we're going to times that by 20%, which is going to give us £120. And on the purchase side, we have purchased office equipment for £1,200, excluding VAT, again, on credit. So we're not paying for it straight away. So we've got £1,200 times by 20% equals £240. Okay, and next we received £800 from a customer in the bank. Okay, so £800 is fine. The trade receivables account for the sale of goods on credit, that's going to be 600 plus your 120, which is 720, and the trade payables, if we purchase office equipment for £1,200 plus the £240, we should be showing 1,440 total in there. So, right, sales account. So the first things first is we need the date, 12th of April. Okay, so the other side of this is going to be trade receivables. And we've got £600 in sales. So we're crediting sales £600. So we also need to credit the VAT control account with the VAT element. So again, let's just copy that across there and change that to £120. So in the trade receivables, we've then got 12th of April, got a sale, which is going to be £720, as in that plus that. So I'm just going to mark these to make it easier for you to see. So that's dealt with that. Purchase office equipment, £1,200. So again, 12th of April, we bought this on credit. So we've got £1,200 there. We've got the VAT element of it, which is £240. So we've got a debit, and then we've got a credit. 12th of April, got a purchase, which is £1,200 plus £240. There we go. So that's that one, that one. Let's turn that orange. That one. Best thing to do is go through this methodically. Received £800 from a customer in the bank on a previous sale which included VAT. Okay, so we want 12th of April. A lot happened on the 12th of April. Got bank of £800 there, and equally that needs to go in the bank. 12th of April, trade receivables, £800. So there's your debit, there's your credit. Let's just make sure we're happy with all of this. Okay, that's that. So that's probably the longest video that I've created on the YouTube channel to date, but I hope you found it really useful. Do give it a like if you did, because it does help to push this video out to other people who could use it. And if you want to try the mock exam yourself in your own time, you can download that on the website just here and have a go yourself, and maybe even come back to this when you feel like you need to. So yeah, otherwise I will catch you on the next one.